Hey guys, hope everybody is doing good. We are going to get started in just a moment. Charles and Robin, hey guys. Dave, it's nice to see you. Edwin, it's nice to see you here. Yehuda, I hope I got that right. It's nice to see you guys. Snorri, Cynthia. George, yeah, it's early. It's midnight? I appreciate that you guys are here. I know for some of you, it's an inconvenient time. And I know no matter where we put it in the time zone, it's going to be horribly inconvenient for somebody. There's no way that we can go around that. All right, so this is webinar number 1. Now, we haven't officially started yet. We will in just a minute. I don't know if this webinar is going to have like an official start, but we'll go through the motions. It's more of an introduction today. We're going to have webinars every week for a while, and each webinar is going to kind of build on the last webinar, and this is just going to get bigger and bigger and more powerful every time we do this. Okay, today we're not going to solve any world crises. We're going to just sort of get into the system a little bit. I'm going to introduce you to the system, and there's some things that I'd like to talk about too. I've been manning the forum since it started. Me and Adrian is here. Most of you are familiar with Adrian if you've been here before. We've been manning the forum, and there's a lot of themes, I guess. There's some common themes that have been popping up. So I think this is a good place to address them kind of right off the bat. But we'll get into that a little bit. So again, my name is Russ Horn, and welcome to Webinar 00. This isn't even the first webinar. This is the pre-webinar. Now, I've been trading since 2000, and it took me a couple of years to figure it out. Once I figured it out, it went fairly easy after that, but it was the figuring it out part that was an issue. For 2 years, I fought myself. I got in my own way, and that was a problem. And I had one of those aha moments in the shower, as I think most of us have. And when I realized that I didn't have to prove that I was the king, it didn't have to be right all the time, things just sort of fell into place at that point. And what I want to do with this, with Tradeonics, is I want to give you a great system. The system is really nice and clean and fairly straightforward. And it works really well. Signals are easy to identify. But I also want to get you in the right place too. I know that there's traders that are here that have struggled for a while. It took me a couple of years to figure it out, but I know there's traders that can do it in less time, of course, but there's other traders that are taking longer than I'd like to see. They've been working at it for 5 years, maybe more, and they're still struggling with it. And if this is the case, there's something that we have to address. I would like to help with that. I want this. Now, it's going to sound weird as a guy that has a system for sale, but I would like this to be the last one that you ever need to buy. And I really mean that. I want you to come here, get what you need, and then live the rest of your life. And if living the rest of your life is as a full-time trader, then I want that to be the case for you. I want you to be a full-time trader if that's what you want. I want this to augment your income if that's what you want. I want this to pay off the credit cards or the mortgage if that's what you want. So we're going to present, again, a great system, but over the course of the following weeks and months, we're going to dig deeper and deeper and get into quite a lot of it. I mean, the system is a technical system. So it has a series of indicators. It is arranging these indicators, and it is looking for ABC, when we have certain setups. And it will give you signals when ABC are lined up. There's going to be some signals where, well, it's A, B, C, D in this case. There's 4 different indicators that we're looking at. When we get A, B, C, D, we get conservative signals, and we get ABC, we get aggressive signals. When we start with this, I would like for traders to start with a demo account. Now, as every trader should do, if you've got a brand new system that you're not 100% familiar with, 100% comfortable with, I don't want you to be risking any money on this. Like you've already paid your dues to get here. The last thing I want now is for you to open a live account and not really be familiar with the system and see some of that account money disappear and not really understand why that is. We're going to get into that. Like, there's going to be losing trades. And as much as I would love to tell you that we're never going to lose, that's not going to be the case. The reality is that no matter what the system is, you're going to have some. You're going to have losses. Now, it's not the losses that we're struggling against. It's going to sound weird. A lot of stuff that I'm going to say is going to really sound odd because I know why you're here and I know what you're looking for. But we need to address the truths, really. So it's not the losses that we're struggling against. It's the impact of the losses that we really want to address. If you're going to have a loss, I want that loss to be small. I want it to be minimized. I want it to be really insignificant. If you take a loss, the next trade should easily make up for it. Now, that is where the challenge or the struggle for a trader is. Most traders are trying not to lose. And in not losing or attempting to not to lose, the losses become devastating. So we're not going to avoid losing. What we're going to do is develop some skills that will prevent the losses from being substantial, if that makes sense. So we're going to take a look at this maybe in a different way than the other systems that you've had. We're not going to avoid losing. We're not going to try to avoid losing. We're going to expect that when we take a trade, we're going to win. But we're also going to have a plan for if it doesn't turn out so good. And that is really the key here. We're going to expect to win the trades, or else why would we take the trades? But then we're going to have the tools in our back pocket to handle it if situations don't go so well. And that's going to happen. There's going to be times where it just doesn't go well. There's so much that drives the Forex market. There's so much going on fundamentally in the world that can make the market change directions on a dime, like just in a heartbeat. Some of it is news releases that we do have access to. Most of it is not. Most of it is just something that is going on that the world reacts to in a very, very quick period of time, very short period of time, some that we're not aware of. And we can't be aware of it because there's just so much of it happening. So when these things happen, these are the things that will prevent the system from winning 100% of the time. The signals will be there. The signals will be clear as day. And as far as any trader is looking at it, when you're looking at a chart, technically speaking, it should just take off in that direction. And it doesn't, because it got to the setup and it got that far, but then something happened. And we have to deal with that. As traders, we have to deal with that every single time we take a trade. We have to be aware that that possibility is there. So with trade management, which we've got here, we don't have to worry about it. We shouldn't have to worry about it. Worrying about it is going to be a hindrance. If you're worried about the trade you're taking, if you're worried about the market turning on you, if you're worried about that, trading is going to be difficult. It's going to be stressful, and it's going to be something that you're not going to want to do for very long because it's a constant battle. I got an email not too long ago about a trader asking about brokers running the stops and something about not placing your stop losses or placing your stop losses really far away or whatever the case is, because brokers try to run your stops. Now, I've been doing this for 15 years, and I've come across one instance where maybe that was the case. It wasn't me. But I've never had an instance where a broker has run my stop. On all the different platforms that I've used and all the different variety of size trading accounts, and some of them have been generous, I've never come across a situation where I felt the broker ran my stops. So if you're getting into this thinking brokers running your stops, you're getting into this thinking this is a shady business. You're getting into this thinking it's full of people who are cheating and trying to get you. And if that's the case, if you're getting into this right now, thinking that they, quote unquote, are out to get you, this might not be the best job to devote your efforts and your time and your sweat and your blood, and, because you're going to put some effort into this. Now, I want to convince you, or I want to try to convince you that I have never seen that. It's never been the case. I do understand your concern, the conflict of interest. You've got a broker that is facilitating your trades, and you think, well, in some cases, it is the case. If you lose, they get your money. And if you win, you get their money. Now, a lot of brokers these days are ECN, or STP or DMA or whatever the case is that gets you into the interbanking market. So they don't have that interest. They just want your spread. And that's what they're in it for. And they make enough money that way that they don't have to cheat you. Now, the other guys, the dealing desks is what they're referred to, is the one-on-one. It's like it's you versus them. Now, traders do a really good job of screwing themselves over, that the dealing desk doesn't have to do it. And they make enough money that they're not going to risk your $20 trade to lose their business license. Okay, I just wanted to kind of take that moment to put your mind at ease, I think. We're not in a shady business. We're not in the business of losing. We're going to lose. We have to accept to lose, but that's not what we're in it for. Nobody's going to make us lose. The market can be fairly unpredictable at times. We want to be prepared for that. And we're going to give you all the tools here. Everything that you need is going to be here for you. I want to cover as many bases over the next few weeks and months as I possibly can. Over 15, 16 years, I've learned a fair amount, and I'd like to be able to share all of that. I want to be able to turn you into the trader that you want to be. There's 3 pillars to successful trading, I think. One is a really good trading system. Because if the system is really bad, doesn't matter how good you are at trade management, you're going to get in at all the wrong times. It's really going to be a struggle. So you need a good system, and then you need some education. You need to know how to use it, and you need to know how to use the system, and you need to know what to look for as far as market conditions and times of days and things like this. Because every system is going to technically give you signals, even when trades shouldn't be taken, simply because indicators are lining up. So you have to be aware of this. It's an educational side. And then the third part is the trader. The trader has to be willing to do this, because there's going to be some time that's invested, and there's going to be some effort invested, and it's going to be worth it. But you do have to want to do this. If you're looking just to hit a button and make some money, if you want to hit yes or no, or buy or sell or put or call, and just make the kind of money lawyers are making and movie stars are making, you might be a little bit disappointed. But what I want for you is to make that kind of thing work. I want you to put the effort in now, so that 2 months from now, you don't even have to think about it anymore. It's so simple and straightforward. And at that point, the assessment you do doesn't take any thinking. And it really does become, I'm going to use the word easy. Say trading should be simple, but it's never easy. Well, I kind of disagree with that. After a while, it does become easy, because you know it inside and out. It's like anything that you can do now that is easy, maybe started out difficult, but you learn how to do it. You put the time in, and it's working for you. All right. Now I've got a fair amount of comments that I haven't been looking at, and I'm going to get to them as much as I can. What I want to do at this point is take a look at the system itself. I'm going to break the system down, and we're going to take a look at some of the components and take a look at some of the setups. And I'm going to kind of through this address some of the common themes that I've been seeing in the members area. So what we're looking at is a 15-minute time frame. One of the common questions that I get is, what's the nicest time frame to trade? What's the most consistent? What's the one that I would trade? Now, I trade the 5-minute time frame a lot. And I trade the 5-minute time frame essentially because I'm limited to the time that I can trade. So I'm taking on a time frame that will get me into a trade and out of a trade fairly quickly. But at the same time, the smaller the time frame you go, you might experience there's a little bit more chop. But what I've found is the smoothest time frame is the 15-minute. I like the 15-minute the best. And I try to trade this when I can. When I can trade, this is the time frame that I'll be trading. It has the nicest flow to it, and it covers enough time that you can get an idea just by looking at the chart, sort of what the market's been doing, what would be an ideal situation. Should I be taking this trade? Should I not be taking this trade? Again, we're going to get into that down the road very soon. I want to get into that quickly. What are good trades to take? What are not good trades to take? Good market conditions, bad market conditions, and so on. But I can see that on the 15-minute. If I have a full 15-minute screen, it's nice. I can get 1 or 2 trades in during my trading session. Now, if I'm trading kind of the London session, I'm going to get at least 2 trades in over the different currency pairs. So I'm looking at the 15-minute. It's a nice, smooth one. This system is designed initially to be trend following in nature. So we've got 4 indicators, and they're all trend bias indicators. We've got the TBL, which is the trend bias long-term. And that's what these dots are. And this is going to tell us where the long-term direction is. Now, this TBL indicator, this is the one that we really are going to hold dear to us. This is the one that tells us what direction to trade. If the TBL is green, we're looking to trade up, long, we're buying. If the TBL is red, then we're looking to sell. And it's really as simple as that. If the TBL is green, we're not selling. If the TBL is red, we're not buying. It's going to be really as straightforward as that. The TBL is one color, that's the direction we're trading. And we're going to notice that the tetragram, which is what these histogram bars is, the tetragram will never conflict with the TBL. So we're not going to get sidetracked. We're not going to get questions. We're not going to wonder, well, what should I be doing? Should I be taking this trade or should I be taking that trade? If the TBL is green, we're only going to get the buy notifications from the tetragram. Now, it's called a tetragram because it takes into account all of the indicators. We've got the TBL, which is the trend bias long, and that's what this green and red dots are across the top. And then in the chart, we've got the TBM, which are the dots, and that's the trend bias medium. It's a medium-term trend. And then the TBS, which is the line that really hugs the price nice and tight. And that's the short-term trend bias. And then, of course, we got the arrows, which have been dubbed the switch. They're quick. They would like to get you into a trade as soon as conditions are met. And they're fast. They're going to flip-flop a little bit, but they really do carry a lot of weight. So much so that if the switch is out of order with the TBL, we can't trade. It's just we won't get a signal to do it. So the tetragram is taking those 4 indicators and smushing them all together and then analyzing the direction of the market and then giving us signals based on that. So we've got 2 different trade types. Now we have a conservative trade type and we have an aggressive trade type. Now, I know with some other systems, aggressive is just another word for a different kind of trade. But with Tradonics, aggressive means aggressive. It means it's a higher risk trade. We're getting into a trade scenario really aggressively. Like, this is really kind of jumping the gun. If this was any other trading system, I would almost consider it too early. This is jumping the gun. We're really getting in at the very beginning of that move. And this is an aggressive type of entry. Like, we've got some aggressive signals in here. Like, you can see how little the market's actually needing to move in order to trigger these aggressive movements. Like, it really is an aggressive type of entry. And I'm going to show you in the upcoming webinars and then in the members area in the forum, what to look out for, what makes an aggressive trade something that you can take, what makes an aggressive trade something that you might want to kind of sit on a little bit. But when we get an aggressive trade, we're getting 2 out of the 3 indicators telling us that things are lining up, that we're really looking at the very starting of a market movement. To start with, again, you guys will be trading a demo account for a while. I'd like for traders to trade mainly the conservative ones, where we get the big green tetragram bars. We're looking for conservative setups, and that is when all of the indicators line up. We're going to get the big green bars. The indicators are all lining up. We're going to get oftentimes somewhere where it starts with an aggressive and then it pops over to a conservative. A lot of times we're going to get the first one will be an aggressive, and then we'll get the conservative right afterwards. And that's okay. That's what we're looking for. And we could hold off on the aggressive and take the conservative. When I do this, I am not taking most of the aggressive trades. I am waiting for the conservative one, and I will take an aggressive trade if I feel it meets other criteria. And I'm going to show this to you. Again, it's a lot of information, and that's why it's getting kind of spread out over a period of time, because it's a lot. And I don't want to teach you so much that nothing sticks. And that's always a problem. When there's a lot to it, there's always that ability to kind of absorb it all and then lose all of it, instead of having it sort of drip fed, as for lack of a better term. But we're going to go at a decent pace here. We're not going to just drag this out every week. Something important and something that's really going to influence your trading is going to be introduced every week. So this is going to be good. Like, this I found is the best way to turn somebody that has been struggling with trading into somebody who's very successful with trading. And that is one at a time. Get the material, learn it, ask your questions, watch the webinar, digest it, figure it out, make it work, move on to the next one. So we have the first short. That's the question that I've noticed here, is going to be right here. Now, this brings up a nice thing to talk about too. A lot of times the market is going to move very aggressively, and we're not going to get real good opportunities to get into it. And that is what we see in this instance here, is we missed this. Okay, well, it would have been nice to catch a lot of this, but a lot of times we're not going to be able to do that. We're not going to be able to catch a big move as it happens, because we just can't get in. It's like a freight train that's moving too quick. You can't really grab on to one of the handles on the cars and jump on. We don't get the pause we're looking for. We don't get the pullback is what we're looking for. Because this is trend following, we are trying to establish a trend direction. And again, the TBL is what's going to do that for us. But then when we get that trend direction, we're going to notice that just because it's a trend direction doesn't mean the trend is going to stick. So we're going to find instances where the trend flip-flops, where the market is moving fairly sideways and the trend goes up and down and up and down. So we don't get these really clear opportunities to do anything about it. They'd be just a lot of choppy losses. So what we want is for the trend to start. And then we need for a pullback to happen. And then we need for a continuation of the trend. This is really one of the fundamentals of old school trading. This is what made the 5% the 5%. I'm going to start referring to that too, because we have 95% of traders not succeeding. And when 95% of traders don't succeed, we're looking at 5% that do succeed. Now, 95% are doing what the small few aren't, or vice versa. They're not doing what the 5% are doing. So taking every trade is what 95% of people want to do. We want to be a little bit more selective in that. We want to make sure that we're trading with the trend. We want to make sure that we have a trend that's developed and what direction we're going to be taking that in. And once the trend starts, once we get that movement down for a short trend, we're looking for a pullback and then a continuation in the trend direction. And we're going to find those pullbacks illustrated in the tetragram. Everything that you need to know is going to be in the tetragram. This indicator here is going to show us absolutely everything. We don't even need the tetragram to trade when it comes right down to it. Let me say that again. That came out wrong. We don't need the price chart to trade if we have the tetragram. The tetragram shows us the trend. It shows us when the trend starts. It shows us when there's a pullback. It shows us an aggressive or a conservative entry. And if we want to take it one step further, we can wait for the tetragram to change shape and give us an exit. So we can trade without ever looking at the market. Now, I wouldn't suggest you do that because there are market conditions that you want to be paying attention to. But with the tetragram, we can trade and not need to see what's going on in order to know, well, this is a trade, this isn't a trade, and so on. So if we're looking for a trade, now this is Yehuda comment. What we're looking for is a trend direction. We're going to just use this example in here. This is just currently what's happening. So we've got the trend starts right here. Let's turn that. Okay, we'll go red. The trend goes down. So we've got the downtrend at this point. We almost had a downtrend in here. We almost had a downtrend probably in here, but it never happened. So I know traders are going to say, well, that's fairly late. Well, that's how that works. Like the trend is going to have pullbacks up and down in a trend direction. When you get a trend that moves upwards, you're going to get these pullbacks, and we don't want the trend to be changing on us just to change back all the time. So we want a solid way to determine a trend direction. And we get that here. The TBL is a solid way to determine when the trend changes. So we get the trend down at this point. And then we're looking for a pullback. Now we can get a pullback that affects the tetragram in a couple of ways. We get a pullback that affects the tetragram by going from the big bars, which is what we're initially looking for. We want the big bars telling us that all the indicators agree that the trend is down, and we only need one of them. And we get that when the trend changes, all the indicators are down. So this is something that we're going to play out as a downtrend. What we want is for a pullback of some kind. And that is going to be something that affects the tetragram. We're going to see that the tetragram either turns to small gray bars or small red bars. And if we get small red bars, we're looking for a big red bar to just try to see if I can get a fairly clear example of that. I would like to cherry pick some of these to begin with, just so that there's no confusion. Or we can do that with some of these green ones here. We get a small red bar, tells us that one of the indicators has switched direction. And it's going to be one of the TBL or the TBM or the TBS has switched direction. Then we get a big bar and it tells us all the indicators are back in line. They're all back going with the trend. And that would be a conservative trade. What we have here is we go from a downtrend and we get the switch that changes. Now, a couple of other indicators change, but when the switch changes, we automatically get a gray bar because we're not going to be trading against the switch. So we get a gray bar and it negates essentially that trend. Now we have the pullback and we're waiting for the market to continue in the trend direction. And we get that with the big red bar. Now, if you get a small gray bar, you get a small red bar that appears, that will be an aggressive long. You get a big green bar or big tetragram bar, you're going to get a conservative. I like the conservative ones best because everything is in order. If you're looking at the bars on the chart and you can see that an aggressive signal happens and the bar is a decent size and it's not just teeny tiny microscopic, I'm more likely to take those trades. But a conservative one, and we're going to get conservative trades that happen with these little tiny bars. And I love those because I can go for 2 to 1 or 3 to 1. You get a nice conservative signal and the bar is little. I'm all over that because I can get 2 to 1 risk reward out of it. Reward to risk, 3 to 1, 4 to 1. Let the trade run and get some more out of it. Oh, excuse me. So the conservative trades are the ones that I'm liking the best. Conservative long. Now this is a nice one because it's just a little tiny bar. You get price pulling into the TBM, starts to move back in the trend direction. It's a little bar. It means the stop loss is going to be small. And if you have a small stop loss, you have either a small target, which is going to be quite easily hit, or you have a target that can be bigger than the stop, which means you're going for a 2 to 1 or a 3 to 1 reward to risk ratio on these. Wonderful. Wonderful. So again, we're looking for a trend to develop. We're looking for a pullback in that trend, and we're looking for the trend to resume. Now, we are not always going to be present when this changes, when the TBL changes direction. So we're going to take a look at what's happening right this second, right now. We have the TBL is red, so we know we're trading only short. We've got the confirmation of the downtrend way earlier on, way in here by the big red tetragram bar. We've had the pullback. So recently what we're looking at is the fact that price pulled back and turned the tetragram bars to gray. And then after that, we've got a conservative short where all the indicators have moved back in the direction of the trend, which gives us a fairly decent entry signal. This would have been at the close. Now, this is something I want to explain to you. In the manuals, the DVDs, I'm always talking about entering at the close of the candle. I refer to this candle as an entry candle. Can I find that chart shift? Oh, there it is. All right, I'm refer to this as the signal candle. This is the signal candle. This is the one that when it closes, everything else, all the indicators are locked in place. We know at that point that we have a conservative short. So we're going to enter at the close. Now, once that candle closes, you can't really enter at the close of it. You'll be entering at the open of the next candle. But I refer to this as entering at the close because it gives me a place to put my initial stop loss. I want my initial stop loss nice and safe. If I were to take a short on that one, if I could get in at the close, My initial stop loss will go just above the TBM here. Oh, plus the spread. So I'm going to give it a little bit of room. So at this point, I'm going to use that candle to determine there's my entry, there's my stop loss. And because I know where my stop loss is, there's my 1-to-1 reward to risk. Now that that's all placed, I'm going to look at where the TBM dot is currently. Now, if I had just gotten into this as this had happened, the TBM dot may have moved just a little bit. So if that's the case, I can move my stop loss just a little bit. So I can enter the trade and then instantly be in a trade where I'm risking less than I'm potentially going to make. And that is such a big deal. If you're only winning 50% of your trades, you want to be losing less than you're winning. You want to be winning more. You don't want to be risking more than you potentially could win on these. So you want to keep those numbers in your favor. And this is how we do this. This is how I'm going to keep those numbers in my favor. I'm going to use the close of the signal candle to give me all the information that I'm looking for. My entry, my stop loss, my take profit, and then the next candle. Sometimes the TBM won't move. It'll be kind of stuck where it is. We have 2 or 3 TBM dots that print and they'll be the same. That's okay. But other times you're going to get some that do move. And when they move, you're able to move the stop loss. And it might not be much, only a pip or so, but that counts. That matters. Having 1 pip stop in your favor is 1 pip in the bank. And I believe that. If you're going for, if you're only winning half of your trades, but you can win, say the 10 pips loss or 10 pip stop loss and 10 pip profit target. If you can move that stop loss to 9 pips, you're going to make 1 pip, because if you win 1 for 10 and you lose 1 for 9, that is 1 pip in the bank. So moving that stop loss is such a big deal to me. Okay, Larry has said that he's lost the audio. Can other people hear what I'm talking? Okay, well, that's good. Awesome. Thanks, guys. Now, somebody has mentioned that they have entered this trade and it's reversing. We're going to get the reversals. They're going to happen. And I wouldn't be worried about it yet. It could come around. This is not particularly a trade that I'd be too keen on entering just now. This is going to bring up another point that I'd like to talk about. And this is going to be covered in much more detail. Is certain times of day lend themselves better than other times of day. Now, I just finished a post in the forum about this, where the markets are driven by currency exchange. We know it's the Forex market, the foreign exchange currency markets. And what makes the prices or what makes the charts go up and down is the exchange rate between these two currency pairs. We've got the Euro USD. That's what this particular pair is. The Euro USD. So what's the exchange rate between the Euro USD? Well, 1 euro buys 1.3173 US dollars. Now, when a currency is made available, more of it's made available, more of it floods the market, that currency becomes worth less. When people have bought the currency, there's a lot of buyers and less of it becomes available for purchase, it becomes worth more. This is your very, very basic supply and demand model. When there's a lot of a product and nobody wants it, it is going to be cheap. If there is less of a product and everybody's trying to buy it, it is going to be more expensive. And that is how this works. So understanding that, knowing that there's going to be certain times of day that lend themselves better than others simply because there's less currency exchange happening at those times of day. we have dead spots. Now we've got a spot like this where it's right in between the close of the New York session and the open of the Asia session. Now the Sydney session, it's on the market hours, but it doesn't carry a lot of weight. The Asia session carries more weight, but it only carries weight with the Australian pairs and the yen pairs, and sometimes not even a lot of weight with them. But at this point, in between the close of New York, in between the open of Asia, there is no major markets that are doing business with each other. There's nobody buying from anybody else. There's nobody paying out. There's nobody taking in. The economy during that window is slow. There's just not a lot of market movement going on, not a lot of transactions. And when the transactions happen, when a big transaction happens, when somebody's paying $500 million for paychecks to a factory that's across the seas, that is one country's currency being depleted and one country's currency being added to with that exchange rate. You're changing euros for dollars, for example. And we're going to get that. And that's going to affect the market. But during these dead spots, we don't get that. There's not a lot of that. So the market becomes very flat, becomes very, very quiet. When you have the Asia session opens, you get some movement. You're not going to get a ton because there's not a lot of other countries that can really do a lot of business just yet. When you get London, the European and London sessions open, then you have essentially everything going. Just a lot of action. You have a lot of market movement, a lot of transactions, and the currencies will exchange rates because you are switching one currency for another on a massive scale at this point. When we get to the close of the London session, the New York session is still open. The close of the London session is kind of around lunchtime for the New York session. And what you have left is New York. You do not have, or North America. You don't have, or, that time zone. You don't have a lot of business going on. Whatever business that time zone would have been doing would have happened kind of earlier on during the start of the business day. Now, the business day is essentially 8 o'clock to 5 o'clock, no matter where you are. If you're in New York, 8 o'clock to 5 o'clock. If you're in Tokyo, for you, it's 8 o'clock to 5 o'clock. If you're in Frankfurt, 8 o'clock to 5 o'clock. So you don't have, at this point, a lot of that action happens 8, 9, 10 o'clock in the morning. London closes. New York is still open. That time zone is still open, but they're the only players out there. Their transactions have been done. They're not able to do transactions with other countries. So it gets really quiet. It gets pretty dead. So we're looking at that here. This is the close of London all the way to Asia. And we can see that during London, there's some nice movement in the market. But then once London closed, even though the US market is still open, the market gets very quiet. So if you're going to take a trade in that window, I would take it cautiously. Take it knowing the market isn't going to move really far. You're going to have a stop loss, which is going to be reduced as the market kind of trickles sideways, but it's not going to make a beeline for your profit target. It's not going to try to stop you out really quick either, but it's just going to kind of trickle sideways. And if you're aware of that, these might be sessions that you want to not be so eager to trade. Now, a lot of traders that are experiencing losses on a regular basis, this is what the problem is. They are finding it difficult to trade during kind of the peak season, the peak sessions. And that's fair because a lot of traders are sleeping at that point. And if you're trading a small time frame, the 5 minute, the 15 minute, you're going to be subject to some of that really sideways market. And it's going to be a bit of a battle. And at that point, you want to switch up a little bit to a 4-hour time frame, 1 hour even, 4 hour or the daily, where these windows of inopportunity don't have such an impact on you. So to really get it started, a lot of the losing trades that a lot of traders have are going to be because of this. And this is really why I include the market hours indicator. So you can see exactly what time of day you're trading. What is the session? What should I be expecting out of the trade? Now, sometimes the thing with trading, nothing is 100% ever. So sometimes the market is going to move in these sessions, and you're going to say, oh, I kind of wish that I was in on that. And well, yeah, I mean, we would love to be in on that when the market does move in those off sessions, but we don't know that that's going to be the case. I mean, we're looking at another window here. Very, very sideways. We did get a little movement. We did get a bump, and then it just died. Just really, really got quiet. You know, we're looking at some chop in here. Like, this was something I wouldn't want to trade. Again, we had something very fundamental come out and affect the market. And then well, it's never a good idea to trade after that anyways, but we had some follow through, a little bit of momentum, but it was still very quiet relative to what happened previously. Time of day is a big part of trading a small time frame. And I want to really make you aware of that. That's part of the U part, or the education part. The system is going to do what it does. It's going to find the parts, and it's going to put them together, and it's going to give you signals. And we want to be able to decide, this is a trade I want to take. This is a trade I am not interested in taking. That's a critical component to being successful at this. Not every trade that comes your way is going to be a trade you want to take. We're going to get that. We're going to cover this in so much detail in the coming weeks, in the coming months, that you're going to get almost sick of it. But what's going to happen is going to be so drilled into your head that you're going to know exactly what the good trades are. You're going to know exactly what the bad trades are. And that is why you're here. You're here to make money with this. So we are going to make sure that all the pieces come together. We're going to make sure that your head is in the right place. We're going to make sure that the assessment is in the right place. We're going to make sure that you've got the right system. And I think you do. This system is fantastic. I love this system. I love it a lot. And it does a really nice job doing what I needed it to do. And you're going to take full advantage of that, but you need the other pieces. And I really want to deliver those other pieces as well. I'm going to read a couple of the comments. So I'm getting a notification that we are 50 minutes into the webinar. We're trying to keep the webinars around an hour. Now, today's webinar, I might be able to do that. But some of you have been with me before, and you know that a 1 hour webinar is few and far between. I think one of the longest webinars we've done was 4 hours. But that is because I want to make sure that you get everything you need out of the webinar. Now, today I've been talking mostly just because I want to get the information out, and I want to assure you. Now, this is really what this webinar is about. Cover the rules very, very basically. We're going to get into this like full out, but I want to assure you that I'm here and we're going to make this work. And there's more to it than just this. So if you've had one system, 5 systems, 10 systems that aren't working for you, chances are you've had a couple of good systems in there. This is going to be another great system, but I want to build on that. We've got a good system. And as far as I'm concerned, it's only one piece of a 3-piece puzzle. Like, it's a tripod of success. Is that the thing? So we're going to have the system, we're going to have the education, and we're going to have just the knowledge base. You're going to learn how to do this. You know, the third part is you have to want to do this. And it's not going to take that long. I promise it won't. Once you decide that this is something you want to do, that you want to learn, it's not as complicated as it seems. It's not as hard as it might appear. It really isn't. There's not that much that we have to really consider. The system takes care of most of it. You have to decide, okay, is this a trade I want to take or not? And I'm going to show you how to do that. And there's 4 or 5 different market conditions you want to consider. You want to consider the time of day versus the time frame you're trading. You know, it doesn't get much more than that. I mean, that's basically going to be it. Do I like what I'm seeing on the chart? Is the entry candle huge compared to what happened previously? I mean, there's some criteria that you want to kind of follow up with, and it's going to either make you decide to take the trade or not. And you are going to learn how to do this. And we're going to do videos. And every time I see a market scenario that we shouldn't trade, I'll record a video and I'll post that so you can see what that is. Now, I guess that brings me to the members area. There's a forum if you haven't been there yet. Can I drag and drop this into here? Yeah, so I've got this forum that you have full access to. Now, I hope you guys are in it. I know some of you are, but I know that not everybody participates. Now, you don't have to participate, but I'd like for you to be in the forum. Now, home. This is going to be the main page. This is the main Tradeonics page. This is the intro, and I give you a brief introduction to all of this. This page that you're seeing now, and the forum, the downloads, and the blog, and the live webinars. This is what you're on today. It's being recorded, so it is in the next 24 hours going to be uploaded. It's going to be in this section. Post your trades. This is where I would like you to be maybe the most active, in post your trade. Now, this is going to take you to a section in the forum. If I click here, it is going to take you to click here to visit the post your trade section of the forum. You're going to go to the forum, and this trade lost. This trade won. I mean, you'd like to show off the winning. I'd like you to show off the winning trades. I would love that. But if you're having troubles and the trade didn't win, and you think maybe it should have, everything was right, post your trade. Take a screenshot of it. How to take a screenshot. There's a video tutorial how to do that. And in that, both of these videos, it shows you how to actually, is it just one? One of these videos, I think this bottom one here, it shows you how to post that chart in the forum. And I would love for you to do that. You've got long, aggressive, short, conservatives, and so on. So you've got a section for it. And if you can post a chart, I would love to see the chart. I will take a look at the chart. And sometimes it's a very quick fix. I'm going to say half the time, it's a very simple fix. If you're not winning the way you think you should be, the fix is often very simple. There's a misunderstanding somewhere, and I'd like to get that across. I would like to show you where that misunderstanding is. This is what it should have been. Oh, okay. I mean, that makes a lot of sense. And then you on your way, and that's all you needed. So you have access to this resource, and it really is the heart and soul of this. The system is good, but this is going to get all your questions answered. There's trade examples. There's what good trades should look like. I mean, the manual DVDs, the progress gifts, trade assistant. Oh, this is nice. I'm not a huge fan of trade assistance. I'm just going to cover this very, very quick, just very quick. But we've got one for the Tradeonics system that I love. I love this trade assistant. What it's going to do is, well, here. Oh, can I do this? Maybe I'm going to get in trouble for doing this. I'm going to show you what it looks like, just very quick. It's coming to you very soon. All right. And this is essentially what we're looking at. This is the trade assistant. It tells you where the trade was. And by the style of line, it's going to show you whether it was an aggressive or a conservative entry. It tells you where the ideal entry price was. Once you enter the trade, it will place your stop loss. It will place your take profit automatically. And then it will start to manage your trade along the TBM dots. Once the trade's placed, you don't even have to take care of it after that. Now, this is a trade assistant. It is going to alert you to aggressive setups and conservative setups. What I don't want for you to do is to take every single trade that comes along. I want you to look at what potentially is coming along, what you want to take, what you're interested in taking, and then use the trade assistant to get into the trade, to alert you to the trade, because it will give you an audible alert that gets you into it, and then go from there. So the way I use this thing is I'm using this template. This is my Tradeonics template. And what I'll do is I'll find a scenario that I like. And if you're anything like me, you're busy. So I'll find something that I like. I find a scenario that I'm interested in trading, and then I end up missing it because I'm either looking at other charts, or I'm writing a manual, or I'm answering questions in the forum, or something like that. There's just something that goes on. The kids are being chaotic and I have to take care of that, or the dog is hungry, or well, there's a million things that can happen. So what I'll do is say, okay, well, there's a trade coming up. I like that. I'm going to put on my assistant and it's going to alert me to the trade. I'm waiting for that trade. Like, I'm waiting for it. That's the trade that I'm going to take. A pop-up window will show up when the trade happens. I hit yes, and then it does the calculation for the lot size for me, places the trade, and then I can go back to feeding the kids, writing the manual, answering the questions in the forum. This is how I use the trade assistant. Before you get too far with this, I really do think it's important that you understand the rules of the system. Now, I'm talking about the trade assistant maybe more than I should, but it is coming to you and it's not going to be long. This thing works brilliantly. The bugs have all been worked out quite a while ago, so this thing is awesome. But it's important. It's important to me that you're familiar with the market, what is happening in the market, to validate the signals that the assistant is finding for you. Yeah, Marcy, you don't have to do anything else. Exactly. Once that trade assistant is up and you click, yes, this is a trade I want to take, because it'll ask you, do I want to take this trade? I mean, it doesn't take the power away from you. It helps you with this. It's like having somebody call, say, hey, Marcy, there's a trade here. You want to take this one? And that's what it does. So you're going to get the alert. You're going to come to the computer. Oh, yeah, that's the one I've been waiting for. I'll click yes. And then that's it. Like, it will place the trade because it's the one you've waited for. You know where the stop loss is going to be. It places it as per the system rules, and then it will manage the trade for you. So once you've hit yes, it is going to get you out of the trade. It is going to progress with the trade. It is going to take care of the trade. It is going to do everything that you would be doing, except you don't need to do it. It'll do it for you. The hard part that you have to do is decide, is this the trade I want to take? Is this the trade I'm waiting for? Do I want this trade? Yes, no. You hit yes. And then the easy stuff, which is the trade management, is what it's going to take care of it for you. And the nice part is it doesn't let you get in the way of yourself. Too many traders are going to let the trade not go all the way. Too many traders are going to let the trade or let the stop loss get moved. They're going to remove their stop loss or whatever the case is. This won't let you do that if you're not at the computer, if that makes sense. It does calculate. Yes. Duvenet. That is a cool name. I've never heard that before. It will calculate the lot size based on the account balance. It knows how far away the stop loss is going to be, and it will make the calculations for you. You decide what the percent risk is. Now, there's other features to it, but you can decide the percent risk. If you want to risk 2, 3, 5, whatever, it takes care of the rest of it for you. You set that up, and then it will take care of it. And again, once you're in a trade, it's going to manage it for you. My biggest concern with a trade assistant is, and I've seen this happen so many times, which is why I'm always concerned. What I want is the best for you guys. I want you, and I said this at the beginning, I want this to be the last system that you ever need to buy. But with that comes education. You have to not just have a system, because what I'm going to say is there are traders here that have bought, could be trading system number 10, and they haven't found the one that they're looking for. And the one that they're looking for is the one that they don't have to think for. They don't have to make the assessment as far as market conditions. They don't have to decide, yes, this is a trade I want to take. No, this is a trade I don't want to take. They're looking for the system that does the thinking for them. And that's why they're on system 10, system 15, maybe system 20, because there's so much more to it than just a trading system. When the coding looks at this, like, we can see the chart very clear. Like, we can see exactly what's going on. We can make these lightning quick assessments. Is this market going sideways? Is it choppy? We can see that. But an indicator uses numbers. It's math, highs and lows and closes. And it doesn't see it the way we see it. And what will determine a choppy market? What determines a range-bound market? These are things that a program can't do. We have to do that. We have to be responsible enough to make those decisions. These are important decisions, and they're the ones that we have to make as traders. Like, a lot of people call themselves traders, and they're just looking for a button to push. And that's not a trader. I've likened it to the fact some people, it's like calling yourself a mechanic simply because you drove the car to the mechanic shop. That's not the case. Like, once you can function as a trader and make those decisions as a trader, you'll start earning like a trader. And again, that brings me to the 5%. There's 5% of people that make those decisions, that can say no to a trade. And those are the 5% that do really well. The trade assistant, some people are going to put it on all their charts, and you're going to just get an influx, especially if you're trading like a 5-minute time frame. You're going to get alerts everywhere, and they're just going to take every single alert that comes along. Good conditions, bad conditions, right time of day, wrong time of day. It doesn't even matter. If the alert pops up, they're going to press the button and then be upset when it doesn't work. So what I want to do is take you from that to market assessment, to being responsible, to saying, this is not a trade I'm going to take. I'm going to let that one go. Whether it wins or lose, we all don't take trades that we kind of wished we did because they turned out really well, but they just didn't set up. They didn't meet the criteria that I was looking for. So that's where I want to get you guys. And if that's the case, this is going to be the last system. That's why I want this the last system that you buy, because you'll have the extra information. You'll be able to trade like a trader. You'll never look at another system the same because you'll have that extra set of knowledge. Like, you'll have that knowledge base that you can trade for yourself. Marcy, calculate 1-to-1 ratio. Yeah, it'll be 1-to-1 by default, but you can make it anything you want. Anything you want. It's a number. If you use 1, it's 1-to-1. If you use 2, it's 2-to-1. If you use 1.5, it's 1.5-to-1. If you use 0.5, you'll be aiming for 10 pips with a 20 pip stop. That option is there for you. Marcus wants to know the walkthrough of the MT4 platform. Sure, I can do that. I keep thinking that a lot of traders are very familiar with this, and a lot of traders are, but there are some that are not. So that would be a wonderful thing to do, is a walkthrough of the MT4 platform. It's very user-friendly once you know how to use it. And what I like about this is it makes it difficult for brokers to scam anybody, because so many brokers use these MT4 platforms that you can check. It's got to be close to 30 platforms on my computer. And I can reference or cross-check one broker's platform with another, and I can tell if something fishy is going on. And again, that's never been the case. Well, that was the case once. Years and years and years ago, I came across one. It was FXCM, did something that no other broker did. I don't like them a whole lot. You're going to discover that in the forum. But that was years ago, and they've been sued so many times that I think they've probably stopped doing that. But I've never come across an instance personally that's happened to me where a broker has cheated me, or I felt that they have. You can easily check by looking at other brokers' MT4 platforms. Because they're all using the MT4 platform, it is so hard for them to get away with anything these days. When will it be released, Sonny? Give us about a week. I'd like to do a week, maybe 2 at the outside. I really want you guys to get a hang of the system, though. Like that's my fear. Like, and it really is. Like, I'm worried that some traders, like you guys are going to be cool, but there's going to be traders that are going to get that trade assistant, and they're just going to take every single trade that comes along. Kind of a shotgun sort of thing, and hope that in the end, the averages work out in their favor. And depending on the time of day, that could work for you. But if you're trading like now, for example, it's going to be just sort of more chaos than anything. You're getting an error on the authenticate tetragram. So once you authenticate it, you save the template. Now, I do that. If I close, I'm not sure why this is the case. If I close the platform and then open it back up again, I get the same error. So what I have to do is just reapply the Tradeonics template. It only takes a moment, so I don't worry about it too much, but save it as you do. Put in your tetragram authentication stuff. If that works, save that as a template. So once you've authenticated it, go to save template, save it as your Tradeonics template. You already have it, just resave it. And then from there, do you want to replace? Yes. So from there, the next time you get that problem, reapply the template. The authentication should be in the Tradeonics and it should work. Now, I have that. Will it have push notifications? Yes, it will actually. Do I still like Talon-X? I do. I do like Talon-X. To be fair, though, I haven't visited them for a little while. The two that I use mainly right now is Invast, which is what this one is, and Think Forex. Now, Think Forex is the one that I have my bigger live accounts on. But yeah, I use both of these. I like them both a lot. But the reason I use the Think Forex one the most is I like their portal better. Is J Deep, is there chart European session still on? Okay, the light green is the New York session, and it should still be on. It'll be on for another 4 hours. I did a video in the members area about that, about how to set up your market hours indicator. You've got to get into the members area, into that forum. If you're not in the forum, then get in there. And if you can't find what it is that you're looking for, ask about it. There's a general, let's see here. Let's go to the forum. There is a general discussion. Now, before I get to that, I want to take a look at this videos. I have this mini tutorial and I'm adding to this virtually daily. So we've got the tetragram, the max bars back. So as a question comes up and it could be explained or better explained using a video, I will do that. I am going to make these little videos. So the last one I did was setting up the market hours indicator. Now I have a video for that. So you can watch the video where I explain. I don't know if you can see that in the webinar. This is all messed up. Like the market hours is all screwy. So I show you how to set that up. So everything that you need is going to either be there. And if you can't find it there, ask about it, and then it will be there because I am going to answer it. I'm going to make a video for it. I'll give you a brief answer if that's all it requires. Whatever it is that you need, you come to that forum and you take care of that. That's where I am. You come to the forum, you ask your questions. Adrian will get to you. I will get to you. Adrian's as knowledgeable about this as I am. But we'll address it. And every single question, hopefully, that's what I try to do, is every single comment or question that's posted gets a reply to it. And whether it's just a thanks, but I'd like to reply to every comment, every question. And again, a lot of these comments or questions can use a video. It's not that they need one, but if other traders are going to get something out of it, if I make a video that explains it, then that's what I'm going to do. They're mini videos. They're only 2 minutes, 3 minutes long, 5 minutes long. They're as short as they need to be to get the question answered. And it often solves a lot of problems. For me anyways, it's a lot easier if I can watch somebody do something. And if I have the video as a reference, I can kind of play the video off here and do what he's doing on the video on my charts over here. And I've got that walkthrough, that play-by-play. Invest and Think Forex, I do believe they are ECN brokers. Eugene, still getting the setting. Okay. Not a lot I can do with this right here. Post a comment in the members area, and what I can do is I create a little video for you. How do I trade when the red news is imminent the same day? For instance, do I not trade for the day? Now, if there's red flag news events, I mean, it's not that I'm not going to trade. If I don't trade during the red flag news events, I'm not going to be trading at all. Because if I miss that day, chances are I won't be trading because there's so many of them. But I want to be aware of when they are, because they are going to pop the market a bit. Sometimes a lot, as we saw kind of here. And sometimes that's barely noticeable. There's a few, FOMC, NFP, what's the other one? The AF, what that was, ADP. I'm just having a brain fart. Sometimes retail sales, like there's a few that make the market move. Interest rates always seem to affect the market, but then there's others that are of interest and they ideally should move the market, but they don't, not really. But as long as you're aware of what is going on, where the market is, where your stops are, do I want to take a trade during this? Am I far enough in profit that I'm not really at risk? If it goes against me, do I want to close the trade just before the announcement of the news? Being aware of the news is important, but I'm not going to not trade simply because a couple hours down the road, there's going to be not one of these really big impact events. Hot Forex, although, Hot Forex, they would be the broker that I'd still be with if they would let me. Owanda, Vladimir. Owanda is a decent broker, but their spreads during times of high impact news is insane. They'll go from a 2 pip spread to a 20 pip spread. And that is going to stop people. That's the one reason I won't use them. I like them because they have a platform that works over the weekend. Everybody calls them Owanda. I call them Owanda. It's called O&A. Robin, if I'm looking at a conservative trade and a switch happens, do I close a trade? No, not always. What I will do, it's an early warning that things may go against you, but the switch is twitchy. I won't close the trade. If I think there's legs on it, what I'll do is keep the trade open. See, this particular one, the time of day, it's not ideal, but let me just pretend that I don't know that. I'll show you now. Like I'm going to use something at this point. I have to decide, Do I want to keep the trade open? Am I going to keep it open? Is it worth keeping open? And right now I'm thinking, yeah, I could keep this open. What I'm mostly concerned about is the TBM. Like that's the make it or break it for me. If the TBM dots switch sides, then I'm not wanting to be in the trade anymore. But if I draw this, because what I'm looking at is this. I have an area of support, an area of resistance. Now, I don't expect anybody to know what I'm doing right now. You're going to learn this. But I've got this area of support. I've got this area of resistance. And we've kind of approached this. And I'd fully expect price to maybe get closer to it, but bounce off of this. And that could be what's happening right now, that we're going to get to this area. So I think there's an art form to keeping a trade that's moving against you open. How to determine, should I keep that trade open, or should I just close it? Now, this is what this is my very basic assessment of this trade. Is I wouldn't mind keeping this open. I wouldn't be too worried about closing it right now, simply because I'm seeing areas where the price bounces. And I wouldn't be surprised if price does get up into the TBM dots before it drops down. There's a good chance that it's just going to do what it's doing right now and drop down. Something that is of interest is we have what's called the TB cloud. TBS and the dots, they form this cloud. There's the lines in between. And you look at an area like this where the price kind of gets into the cloud and then comes back out again. And we're looking at that right now. Price kind of got into the cloud and it'll get sort of thrown out of the cloud. And I'm thinking we're going to see some of that. So I've got that coupled with this area of support resistance that I like. I could see that the price could follow through and ideally get to, kind of down in this area here. It might even get a little bit further. It could get, depending on the price action, it could get, if the price starts to meander and it goes kind of sideways, then I'd expect it to get a little bit lower. I'd expect to get kind of in this region here before it stops moving down. But that's my very basic assessment. We're going to get into this. I've been told I have a crystal ball sometimes, and I want to show you exactly what it is that I'm looking at. I don't expect anything that I just said to make any sense. We're going to be looking at this in detail in upcoming webinars. All right, guys. Robin, has anyone else had the problem moving the price chart to the left and having it pop back? This is the button you need to push. Yours is like this. It's called your auto scroll. When it is turned on, it'll pop back. As soon as there's a tick of movement in the market, it'll pop back. All right. As soon as you turn it off, you undepress it, that will not happen to you. All right. Well, I hope I covered enough today to make you think that this is where you need to be. And that's what today's webinar was. I want to reassure you that you're in the right place. I want to reassure you that you're going to experience some losses, and a lot of them are going to be something that we can address. There's traders that take trades too late. There's traders that take trades when there's no trade to be taken. There's traders that take trades at the wrong time of day and expect the market to move. When I started way back in the day, I had this inclination that when the system gave a signal that the market was going to move, and that's not how this works. When the market moves on its own time. And what we're trying to do is interpret the market with these indicators. The indicators is like a translator. The market speaks a language and we don't understand it until we get some kind of translation. And this is how we translate the market, is using the tetragram. We are translating the market using this particular indicator. And sometimes the words don't come across, but generally we get the right idea. We get the sense of, we get the context. So the market isn't going to move simply because an indicator gives you a signal. The market does what it does, and the indicator is trying to interpret what the market is doing. And when everything lines up, we're going to get a signal based on the market's, or based on the indicator's analysis of what the market is doing. This criteria is met, this criteria is met, and this criteria is met. We're going to give you an aggressive trade. One more, the final criteria, that one's finally met. We're going to give you the conservative trade signal. And that's how this works. That is how any system works. The idea is to get the system clear enough that there's very little question about the signal, that it's not ambiguous, that there's no doubt about, okay, well, that's a signal. Like, I can look at these and I can tell exactly when there's a signal. Like, there's no question that that is a long signal. Enter at the close. I know where my stop loss is going to be. I know what my take profit is going to be. This is a conservative long signal. I know this because of the clarity, like it's crystal clear. I know this is a short signal. Again, there's no question about where my entry is going to be, where my stop loss is going to be, where my take profit is going to be, that this is indeed a signal to go short. There is no question about that. Now, that is a nice feature of any trading system. You want that clarity, that crystal clear assessment, nothing that's up in the air, nothing that's coded or ambiguous or makes it difficult for you to trade. So with these clear signals comes some trades that aren't going to win. And I would like to see the ones that aren't going to win. If you don't win a trade you think should have won, I would like to see it. I really would. Like, I want you to post that image in the forum and show it to me. And I'm going to make some kind of assessment. And sometimes it was a trade that was really good and it just didn't work out. And we get that. And I get that just as much as anybody else does. You can expect, I don't know how many of you guys got the book, that tips and tricks book. There's a thing in there called the bag of marbles. And what that essentially does is it tells you to expect a certain percent of losers. Expect them. They're going to happen. So when they show up, it's not going to crush you. It's not going to devastate you. It's not going to make you think, I can't do this. I mean, traders have, because we're trading with money, there's so much on the line. And you want so much from this. You want a future. You want to make things better. That when you have a losing trade, it can be devastating for a lot of traders. Like, it's an emotionally draining thing to do. But when you have the bag of marbles, you read that section in the book, whatever, what it does is it assists, or it will tell you what your expectation is. When you have the losers, that's not a problem. Can the trade assistant work on several charts simultaneously? Yes, Vladimir, it can. It can work on every chart that you put it on. Robin, I didn't see my questions were answered in the forum. Oh, sorry. Okay, that's an addressment to Adrian. Sorry about that. The next, getting tongue-tied now. Marcus, the next webinar is same time next week. For me, it's 10 o'clock in the morning on Thursdays, 12 o'clock Eastern on Thursdays. When we go to, I don't know if it's set up yet. When you go to the register for the live webinars, it's going to be, if it's not set up now, it's going to be right away here. You'll see a countdown. Live webinars. Yeah, so this is going to be reset. And what will happen is it'll give you a countdown. It'll tell you exactly how many days, hours, and minutes until the start of the next webinar. This one's going to be reset by the end of the day today. And then, you come back here and everything will change. The date will change, the reset, the countdown. You can register for the next webinar, but every Thursday, unless something happens, which is very rare that that's the case. So again, thanks for attending today, guys. We didn't cover a ton of the system. What I wanted to do was really just let you know that this ideally is the last place you'll need to be, and that will help with whatever. Like if you are struggling with whatever it is, I would like to get into the psychology. Now, I've always been a big player for the component. I've always liked the psychological aspect. When I came to grips with it, that's when my trading changed. Sorry, guys, I'm mixing my words here. My trading got better when I realized I was the problem, not so much the system. When I made the discovery, and that's what it seemed like, that the system is not going to win all my trades. I would love for that to be the case. And that's what I wanted. I wanted the Holy Grail. I wanted the system that won all the time. But when I realized that that wasn't going to happen, that I had to deal with that somehow, I had to work around that, then my trade management became better because I wasn't trying to force the trades anymore. I realized that all the problems that I had had previously were due to my inability to cope. And that's basically what it was. Like, I couldn't cope with a losing trade properly. I took it personally. It was, I took it like, you have a winning trade or you have a losing trade. You have to make that back. And that hits you psychologically to begin with. Okay, well, I've just lost X amount of dollars and the next trade, I've got to make that back. But there's something traders experience called recency bias. And recency bias, I believe that term has actually been dubbed specifically for traders. But what it means is you can have a string of winners in history. Like, let's say you've been trading for a month and you've just winning. You'll have one loser. Now, what recency bias does is put so much weight on the most recent event that it affects your decision right now. So recency bias means that if I just lost my last trade, then I'm afraid to take the next one because I think it's going to lose. It's also a problem the other way. Recency bias for the winner. I just won the last trade. I am unstoppable. There's nothing that I can do wrong. I'm going to load this trade up. I'm going to trade twice as much because I can't lose. Like, recency bias sways a trader. And if you can get over that and look at the results as groups of the pros, look at their trading results in groups of 1,000. What was the last 1,000 trades? They don't care what the last trade was. They really don't. They don't care what the last 10 trades was. They could all have been losers. What were the last 1,000? What information can I get out of the last 1,000 trades? And if you can get to that level where you're looking at your trades in groups of 1,000, you're unstoppable. You really are, because there's no one trade that's going to influence how you're trading, how you're going to continue trading. Ray, that is exactly it. And that's the word I was going to use, was an exponential basis. Recency bias is like an exponential moving average. It puts more weight on the most recent information, the most recent data points. It's not the simple moving average where it's all nice and even. No, recency bias puts so much weight on the most recent event that it heavily influences your decision right now. We want to avoid recency bias. I think recency bias was a term coined for traders because we deal or have to suffer with it. Trading is a tough job. When you are struggling with the emotions that are involved, when you're struggling with doubt and hesitation and all of that stuff, like, this becomes one of the toughest jobs to do. If I can help you get over that stuff, this will become one of the most profitable and easiest jobs that you can do because you don't have the baggage. Again, for lack of a better word, you don't have that in the way. You're not going to be devastated when you lose. If you can look at your trades in groups of, in the book, I chalk it up to 30. If you can look at it in groups of 30 trades, then you're doing okay because not one trade carries so much weight that it really wrecks your day. Nobody likes to lose. Nobody likes to lose. I'll be the first guy to admit that I hate losing, but I don't let it affect my next trade. I can be mad about it and I can be all stomping my feet and I'll bitch to Adrian about it, but I'm not going to let it affect the next trade I take. And that's where you have to get. You don't have to like the trades. You're going to read that in the information. You're going to look online. Oh yeah, learn to love your losses. Like, no, nobody loves their losses. It's money that you threw away. It's money you have to make back. Nobody likes that. The thing is, you want to get to a point where you don't allow it to affect the next trade. You don't let that recency bias play a role in your trading decisions. Okay, it is, again, try to keep this at an hour. We're looking at 90 minutes right now. I think I have a problem. I need therapy. All right, guys, I am going to call it a day and call it a webinar. We're going to have this uploaded in the download the webinar or view the webinar section, and give us 24 hours for that, please. And then you can watch this over and over again. We're going to get into this more and more. Now, I haven't answered too many questions, just kind of the ones that sort of pop up right at the end here. I've seen, I've asked, but I know that there's a ton of them. And I'm so sorry that I didn't get to most of them. Upcoming webinars, though, we're going to take this to the next level. We're going to introduce new features. What's going to happen, though, is I'm going to spend more time answering your questions because this is a good place for that. You have a question, it's on your mind right now. I can show you on a chart, and I'd like to answer as many of them as possible because this is a good place to really, get your questions answered. Now, if I did not answer them and you need an answer to them, the forum, that is the place to go. Go there, register, sign up, or whatever you got to do. Ask your questions, and I will get to it. I promise that I will. I get to every question every day, or I try to at least. And if I don't feel bad asking the question again. My goal is to answer every single question. Because there's so many at times, sometimes one or two do get missed. I overlook it in the string of things. So if I do miss it, please either comment on your comment so that it pops up to the top of the queue, or ask it again. Because I want to help. I want to make sure that you guys get every question answered and that this is worth it for you. That is the thing. This has to be worth it for you. You paid your dues. You're here, and it was a big deal getting here, and now it has to be worth it. And I want to make sure that you're getting more than you pay for. All right, guys. So with that being said, I am going to stop the webinar. It's going to be posted, and I look forward to seeing you either in the forum or in the next webinar, guys. You take care. Bye-bye.